In 2021, electric truck maker Rivian hit a peak market cap of $127 billion. That marks the top of the bubble, and today the market cap is just $13.1 billion. With $11.2 billion of cash and $2.7 billion of debt, the enterprise value is only $4.6 billion. Meanwhile, the company produced 24,000 vehicles last year, and it made $2.2 billion in revenue over the last 12 months. That means the stock is valued at just over 2 times revenue. Although Rivian has a good chunk of cash on the balance sheet, it needs it because the company is losing a lot of money. Adjusted EBITDA was negative $5 billion last year, and free cash flow is negative $6.8 billion over the last 12 months. There's no way around that in the automotive industry, but Rivian is making progress. It hopes to deliver 50,000 vehicles this year and hit $4 billion in revenue. It's guiding for a loss of $4.3 billion EBITDA in 2023, which would be almost a $1 billion improvement on last year. And the company's vehicles are well received. The R1T was named Motor Trend Truck of the Year in 2021. The R1S has also received good reviews. On the commercial side, Rivian still has an agreement with Amazon to produce 100,000 delivery vehicles. That agreement is what helped spark the initial enthusiasm for Rivian stock, and Amazon still owns 17% of the company. That said, it's difficult to value a company that isn't expected to make a profit until 2028. Even with $11 billion of cash, Rivian will at some point start to run out and need to tap markets for additional funds. And Rivian still has a market cap 1/4 the size of Ford, which will be a strong competitor in this market. But if Rivian can meet its targets this year, it does set up a potentially critical 2024. Electric trucks and SUVs are by far the most profitable categories in the US, and if Rivian can become a leader in these, it would become an enormously valuable company. But there's also a risk that Rivian fails completely. The capital needed to succeed in this industry is just so big. But the contract with Amazon does provide some ballast and gives Rivian an advantage over other startup EV companies. Rivian could go to zero, or it could also 10x in value. It's a speculative stock, but the lower share price creates an intriguing opportunity. I'm going to give it a cautious bullish rating, but these are my personal opinions, not financial advice, and I've got no position in Rivian stock. For more detailed analysis, visit our website at overlookedalpha.com.